Hi guys, this is Swarupa. Welcome to our channel, Tax Companion. Today we are going to discuss about a very important amendments that is effective from 1/10/2022. So a lot of changes and amendments were proposed in Finance Act 2022 and CBIC by notification number 18/2022 dated 28/9/2022 notified that the appointed date for implementation of Section 100 to 114 of Finance Act is 1/10/2022. With respect to Section 110C and Section 111 of Finance Act, the appointed date is already notified to be 5/7/2022. We'll first see what these two sections are. Section 110C seeks to amend Section 49 of CGST Act 2017. By this amendment, now the taxpayers are allowed to transfer the balance in electronic cash ledger from one GSTN number to another GSTN number under the same bank. So this provides a lot of relief to taxpayers for an easy transfer of balance in electronic cash ledger. But this is possible only when there is no unpaid liability in the GST number from where the transfer is made. Section 111 seeks to amend Section 53 of CGST Act 2017. This amendment is also providing a lot of relief to the taxpayers because now the interest is leviable only when ITC is wrongly availed and utilized. So if the ITC is wrongly availed, then no interest is leviable. Only when it is wrongly availed and utilized, interest is leviable. Now we'll see the other amendments which are effective from 1/10/2022. With respect to due date, there is a major change. The due date for availing credit with respect of invoices and debit notes of a particular financial year is extended up to 30th November of the next financial year. Earlier, it was linked to the due date of filing return of September month. Similarly, the due date for correction of errors and omissions in GSTR1 as well as GSTR3 is also extended up to 30th November of next financial year. The due date of declaration of credit notes pertaining to supplies of financial year is also extended up to 30th November of next financial year. Due date for filing returns by non-resident taxable person. Earlier, it was 20th of succeeding month, but now it has been decreased to 13th of succeeding month. With respect to refund, the time limit for claiming refund on tax paid for inward supplies of goods, services, or both with respect to entities notified under Section 55, that is UN and other entities. The time limit earlier was 6 months. Now it is extended to 2 years from the last date of the quarter in which the said supply was received. There is one more amendment in the refund section which provides that if any refund is due to a registered person and at the same time there is any pending liability to be discharged, it may be tax, interest, penalty, and there is no court, tribunal, or appellate authority stay. In that case, the proper officer has an option of either adjusting the dues against the refund and paying the balance amount, or he can withhold the refund till the amount is being paid. With respect to cancellation of GST registration, there are two changes. In case of composition data, if GSTR 4 of the financial year is not filed within 3 months from the due date, that is 30th April as of now. If it is not filed, then the registration of the composition dealer is liable to be cancelled. Earlier, it was non-filing of returns for 3 consecutive tax periods. In case of a normal taxable person, if the returns are not filed for such period as may be prescribed. Earlier it was for a continuous period of 6 months. If the return is not filed, then the registration was liable to be cancelled. Now they have taken off the 6 months and they have replaced it with such period as may be prescribed. So government can even reduce it to less than 6 months if required. Then, with respect to returns and statements, they have made the return filing process more stringent now. If GSTR1 of the preceding period is not filed, then you cannot file GSTR1 for the current period. Similarly, if GSTR1 and GSTR3B of the preceding period is not filed, then the GSTR3B of the current period cannot be filed. They have removed the restriction on furnishing details of outward supply, that is, restriction on GSTR1, filing of GSTR1 between 11th to 15th. Similarly, they've also added more power to government. The government can prescribe the conditions and restrictions for furnishing and communication of details of outward supply to the recipient. So the process of two-way communication is done away with, and the government can now prescribe other conditions and restrictions which are to be adopted by furnishing of returns. With respect to inward supply and input tax credit, Section 16 of CGST Act was amended by way of insertion of Clause 2BA, which gives a statutory backing to GSTR 2B that is currently in place. So GSTR 2B currently has 2 sections, that is the credit available and credit not available. So this particular amendment gives a legal backing that format of GSTR 2B. It states that input tax credit can be availed only if it is allowed at GSTR 2B. They've also amended Section 38 of CGST Act 2017 that states that an auto-generated statement will be provided to the recipient based on the data filled in by the supplier in that GSTR1. And the statement shall provide for input tax credit that is available and input tax credit that is not available or that is disallowed, based on a few restrictions. Restrictions are majorly a newly registered supplier within such period as may be prescribed. They will not be able to avail the credit. A registered person who has defaulted in payment of tax for the prescribed period. A registered person availed more than the allowable credit during a prescribed period above a prescribed limit, then we cannot avail the credit of that particular person. In case of short payment of tax for a prescribed period above a prescribed limit, then the ITC of that supplier cannot be availed by the recipient. A registered person who has defaulted in discharge of liability as per Section 4912. Section 4912 is the minimum amount of liability that has to be paid by cash. Any other conditions as per may be prescribed by government. So if these conditions, if any of these conditions are there, if these restrictions are there, then the credit will go into not available category and you will not be able to take the credit because of the amendment in Section 16 of the Act. The concept of provisional availing of tax credit is also done away with. The section now states that self-assessed tax or self-assessed ITC can be availed and utilized, and in case the supplier has not paid tax, then it has to be reversed. If it is utilized, it has to be reversed with interest, and it can be re-availed when the supplier pays tax. So these are the major highlights of the amendments which are effective from 1/10/2022. I would love to hear your comments in the comment section. And stay tuned for more updates on tax laws. Thank you.